The melt up is going on right now before our very eyes, and you might ask the question, what's going on? We're going to answer that today. You came here for the truth, so let me unveil that for you. In today's video, we're going to look at what happens with the US dollar, and of course, the markets in general when the United States government starts to hyperinflate their currency. I'm going to explain it all right here, right now. First, we're going to look at the issues that are going on. Then I'm going to talk to you about what is mathematical and what cannot be avoided. Okay, so it's going to be two parts to this video. Part one, let's begin. You're seeing US stocks have already reversed a third of the post-election rally. Oh my goodness. You gotta sell sometimes. That's the way this works. And you have to expect, that it does go down sometimes. This is part of a normal process, that you have investors, you have speculators, and they're taking some off the top. That's what's been going on. This is a melt up. Okay, they call it a melt up. I don't really like that. I like it as a devaluation of the currency, but let's use that term so we can hit those keywords. Credit card debt hits a record $1.17 trillion. You see what's happening here? More and more debt. This is not good debt, supposedly good debt. You know, people buying homes, 20% down, they're diligently paying. That's not what this is. This is credit card debt. This is 20, 25, even 30% interest rates. Insane. That's what's going on here. In addition, America's homes are piggy banks that few people can afford to raid. You're seeing people, they're using it as an ATM. Very dangerous policy, but of course, it goes on all the time. Jamie Dimon says that bankers dancing in the streets on the hope that there's going to be a loosening of regulations. The bankers dancing in the street, and it's coming from him, the demon himself. Can you believe that? There's all of this, okay? I'm going to connect it. Stick with me. PCE inflation slips to 2.1%. Annual rise moves closer to the Fed's target. I want to show you that inflation is not going to come up in the statistics. You're not going to see any of this because we are moving towards devaluation. Why though? Does it have to be that way? Oh, we are already Wile E. Coyote off the cliff. Can't be reversed, won't be reversed. That was part one. Part two, I'm going to make it as quick as I can, okay? And then, by the way, if you're wondering, where the heck has this guy been? End of the video, I'll tell you, okay? The long-term consequences of what we have been seeing all along. You know, you can't walk away from that. You can't ignore that. And right here, you can see it for yourself. Government current expenditures, interest payments, and this has absolutely skyrocketed. Absolutely skyrocketed. And of course, you know, you'll hear from one person, you hear from another person, oh, don't worry, it's manageable, it's not, whatever. You say whatever you want, but I can be very clear about this and intentional about this, that you have a problem when the government is paying $1.4 trillion just on interest. Do you not see a problem with that? The expense is bigger than all of the bombs that are being dropped around. They're bigger than spying on your phone calls and emails. It's bigger than all of this put together. The interest, and the interest gets paid before you do. So the government actually will pay interest on this nonsense fake debt that's been created out of thin air, rather than give you what you need, whether it's healthcare, whether it's education, whether it's your infrastructure. No. Interest. Okay. So they're going to do that. They're not going to change. They're not going to say, okay, we're done with this interest thing. We're not going to do that. We're going to put it. No. They're not doing that. It's 1.4 trillion and it's getting paid. Okay. And the bankers are dancing in the street. They already are. Trust me. They already are. Okay. Especially at the Federal Reserve. And so we have a problem here. Because if they're paying $1.4 trillion, what's going to happen? How is that ever going to get paid back? Well, that could be done in one way. Simply by having these debt auctions, treasury auctions, and you have an investor that'll come in and they'll buy up the US debt. And so the system could keep moving. That's how it works, okay? They have an auction. All right, just like you would think, it's a regular auction. Hey, who's going to bid on this? Who's going to bid on that? All right, we're going to offer this 10-year note, and we're going to give, 5% interest. Okay, who's going to buy it? Raise your hand. Raise your hand. Okay, you're going to buy it. You're going to buy it, and so on and so forth. But what if, the government wants to spend a lot of money, and instead of, let's just make up a number. Instead of spending $1 billion this month, they want to spend $2 billion this month. Well, that's fine as long as they can have a buyer. And you could see here, Monday's auctions were susceptible to demand shortfalls at $69 billion and $70 billion, respectively. The 2- and 5-year note sales are the biggest of the Treasury's monthly fixed offerings, normally held on separate days. And they're more earlier, they're tightly clustered because of the timing and so on. And so you have this idea that, hey, wait a minute, maybe there's not as much demand. Now, we have to step back for a moment here. Look around the world. If you're an investor and you want fixed income, you can get it from the US, you can get it from Germany, you can get it from Canada, you can get it from, Egypt, whatever you want. You can do this. And oftentimes what happens is if you take a higher risk, well, then you can get a better return. You don't know if you're going to get paid back, but for those people that are using it, usually they don't even hold it to maturity anyway, but they're going to be able to buy those, get the return on them, all right? If they think that the bond market is going to do what they, as they invest in it, basically. So the idea here is if there's too much debt, there won't be enough buyers. Who buys the debt in that case? Long term, we have a problem because there's not enough investors. The Federal Reserve has to come in. Or suddenly the government can drastically be reduced, not by a little bit, not by a couple trillion, not by a couple trillion, my goodness. No, it's got to be drastically reduced. And are they going to do that? Of course not. Of course not. Okay. You can put tariffs on it. You can do it. It's like trying to have a Band-Aid over a gunshot wound. It's not going to fix the problem. Okay. So what can the government do? Well, I would ask, what are you doing for yourself, for your family? Because the government's not going to save you. That's the truth of the matter. You have to invest appropriately. You have to prepare accordingly. If you think there's going to be no inflation, if you think there isn't going to be inflation, then you would invest that way. But if you believe that we are encountering a devaluation of the currency, I think it's pretty clear, then you have to deal with it in the way that to me seems very logical. And it's that if you're making $1 million, well, that million ain't what it used to be. It just ain't what it used to be. And so you've got to be prepared for that. Take the actions. If you want to know what I tell people in the Finance Friday, please join in for free. This is sponsored by one of the members of the group. I've done this before 2 times now. People have won. I've emailed them. They did not reply. You have to reply to the email that I sent you. It might be in your junk mail or something. Okay? The Money GPS isn't exactly, it's finding its way through the spam filters, I guess. Check for the email, okay? If you want to get on by the time you're watching this video, this Friday, if you can make it, apply, get on in and learn from me directly, okay? And I hope you do. Janet won't be there, but I hope you'll get on. I'll be able to explain it in depth. 2 hours on Friday nights, okay? So get the giveaway. Link is in the description at the top there. I want to see you. If you're wondering, what's this guy doing and what does it have to do with this video? Well, I saw the writing on the wall many years ago and I realized I got to do something else. So what have I done? Physical products business, okay? Selling on different platforms. I sell all around the world now at this point. Second thing, started a business surrounding Google Ads. So we're now just at the ground floor of that business. And we have basically my third thing, which is that I'm building an Amazon app. So I learned how to code, as they say, and we'll be implementing machine learning into that app. So it's just the things that I'm doing. So I've been extremely, extremely busy day in and day out, every single day, because I'm trying to do what I think is the right thing, okay? I'm just going with what I think is the best. Who knows? We'll see if it is. But I'm trying to outpace inflation. I'm trying to make money globally. I'm trying to earn US dollar. I'm trying to earn, British pound. I want everywhere. I'm even talking to United Arab Emirates to be in locally over there. I'm all over the place. I'm all over the place because this world is changing. You don't have to say, well, if I get my guy in there, everything's going to change and I'm all good. Don't wait. Take the action today. How many people are going to watch this video and just go out, you know what? I don't need to do anything. I'm done. Or I'm going to go watch the next video. Take action. Take action. If you want to join the group, great. Links are in the description or themoneygps.com/live. If you're not ready, just go to themoneygps.com, click on Compass. When you go to Compass, that's where you're going to be able to just learn the fundamentals of finance and economics. themoneygps.com/compass. Check it out. If you want to just email me anytime, you could do so, or contact me on X. I'm always there at themoneygps. I'm active on there. You could see more information about the things that I'm doing. You can message me through there. DMs are open, or you can do david@themoneygps.com. Don't sit, don't wait. Actually take action. Do something different. Learn new skills. I didn't know how to code. I just went for it. Knuckles are bloody, and I'm ready for the fight. All right? I want to see you next time. Don't forget to give that thumbs up. Do the giveaway. There's so much, okay? So much to do. Don't sleep. Take the action. I'll see you on the next one. Take care.